Doing
I'm
great.
doing great.
All right, let's see. We got a couple folks we're letting in the waiting room and looking forward to. We're going to learn some stuff tonight. We are live on Facebook we just went live, so we want everybody to be on their best behavior because we got a special guest and plus we're live on Facebook. All right.
Okay. I'll do my best.
Yes, sir. Yes, sir. Yes, sir. All right. Well, while we're getting started, we certainly want to welcome Nikki Vinluan, who is going to be our special guest tonight. And Nikki, thank you for joining us tonight for Talk Tuesday.
Thank you for having me.
Yes, ma'am. So we got to get rid of some of the pleasantries before we get down to business. So
Okay.
Deacon Brown and Sister Dorothy and the rest of the people in Facebook world, I'll tell you a little bit about how I met Nikki, and then Nikki can tell whatever else she wants to share after this.
Okay.
So I met Nikki back when I used to work for the People's Bank. She was an employee and she was a great young lady. I met her then, and we've been friends for a long time, and I've gotten to know her father, Jeff Gabriel, who's a great handyman, all around fix-it guy. He's a veteran. He's a God-fearing man. He's just a great person, and so she comes from a great family.
Thank you.
But not only does she come from a great family, she married into a great family. Her husband, Josh Vinluan, is the son of Brother Les Vinluan. Brother Les Vinluan is responsible for me getting to know Christ. Brother Les led me to Christ, me and a group of other young men back in the early 80s. He introduced us to a program called Word of Life. And Word of Life is a sports program that takes people in the cities, in neighborhoods, and introduces them to Christ through sports. You know, if you want to witness to people, it helps to try to catch them doing something that they enjoy doing, right? So Brother Les Vinluan knew we loved basketball, and so he introduced us to Word of Life, and we went all over the United States playing basketball as far away as a place called Scroon Lake, New York. Now, I know you ain't never heard of it, but if you get out the map after this meeting and you look up Scroon Lake, New York, you'll find that it's way, way up in the Adirondack Mountains in New York. I mean, we drove, it was about 25 of us on a van, and it seems like we were never going to stop driving to get to Scroon Lake, New York. But we went there, and it was in New York, Scroon Lake, New York, that I actually cast my stick into the fire as a symbol of me dedicating my life to Christ. And so I always credit my Christian walk, even though I joined my church years after that, it was my walk with Word of Life that really got me involved with the ministry of Christ. And so I always tell that story, Nikki, because I credit Brother Les Vinluan, the person, for introducing me to Christ way back in the 1980s. So we got a little history there. So Nikki, all right, now I've told a lot about how I've met you and your extended family. Tell us a little bit about you and what you do.
Okay. Well, the first thing I want to tell you is that Brother Les is also responsible for leading me to Christ when I was about 14.
Wow.
Yeah. So I was always in church when I was little, but I never really understood, anything. And my papa always took me. But he did lead me to the Lord and through that ministry. And then I ended up marrying his son. So I was very fortunate to find him. But and I was 19 when I started working at the bank.
Wow.
So
it's been that long.
Yeah. And it's been 20 years. So yeah. Wow. So I have a 19-year-old. He just turned 19 yesterday. And I was just thinking about how amazing he is and how fortunate I am. So
That's great.
Yeah.
Well, we really appreciate you being with us tonight and
Yeah.
talking to us about mortgages. You know, one of the
Yes.
most important assets that most people have is their home.
Mm-hmm.
And the challenge obviously is to get it paid for, right, Al and Dorothy?
Mm-hmm.
We need to get our homes paid for. And one of the ways that you can help get them paid for is by lowering your interest rate, your finance charge. And so Nikki's going to talk to us tonight about, is this a good time to refinance? And if so, she's going to walk us through some of the things that we need to know as we consider maybe refinancing our homes. Nikki, is that fair?
Yes, that's perfect. And I have a list of questions. But if you have a question, raise your hand. I'm sure Kenny will let you speak. But so what I do is I've been working in the lending since I was 19. So that I met Kenny in the loan department. And then I grew into this position just over time in different aspects and different jobs. And so I've been doing mortgages for about 5 years, and it's very rewarding. And one of the ways that it rewards is by teaching others how to really capitalize on what they have, what they own, and educating individuals about, how to make sure what's going on, right? So the typical person does not know a lot about refinancing their home because they might only buy a few in their lifetime. So going through the mortgage process is not something that everybody really is comfortable with doing. And usually it comes with lots of questions. So refinancing is a good way to take what you already have and meet some type of goal that you have, whether it's to pay your house off early, or if you want to just lower your payment because you need a payment boost for lowering. You want to you're in a tight squeeze, or you've lost your job because of COVID and you just need a lower payment. So there's a couple of reasons people refinance. And if it's not beneficial for you to refinance, the person that you go to will be able to let you know that, because sometimes it's not beneficial for you. So the first question that Kenny had for me is, when is the best time to refinance? And I would just say, like, as of right now, interest rates are really extremely low, and they're continuing to stay low even through the elections, which has been really good, right? So we want to take advantage of those low interest rates. And right now, like I said, they are lower. And so this is a good time to refinance. Now, if you just bought your house, it's also a good, you can, as long as you've been in that house for 12 months, you can look at refinancing. If you've had your loan for a really, really, really long time, and you're on the tail end of it, it might not be beneficial for you. So is there any questions about the best time to refinance, Kenny? I can't hear you, Kenny. You muted yourself.
Sorry, I'm trying to multitask because my wife's cooking. She's cooking dinner, and I didn't want y'all to hear all that. My fault.
Oh, it's okay.
But that's always an important question. Is this a good time? So, Nikki, yeah, I think you've touched on it about the rate.
Okay.
And whether or not you've been in your house long enough for it to make sense.
Right. Yeah, so it really needs to make sense in multiple ways. So some of the questions that Kenny has is, how much of a rate difference does it take to make sense to refi? And there really isn't a magical number that I can give you. The only thing I can tell you is that it's very circumstantial. So you need to consult with a mortgage person and make sure that that mortgage person is familiar with your situation. And it may involve a credit pull. Sometimes if you're a veteran, I don't know if we have any veterans on the call, it does not require that, and it may not require an appraisal. Right now, things are very advanced in the mortgage industry. Their technology is increasing rapidly. So they have a lot of information, and they take all that information and they're able to make it to where a lot of people don't have to have appraisals now to do a refinance, which is good because it saves you money. But so the rate difference is really going to be circumstantial. If you're a veteran, if it depends on what kind of loan that you have, if you're in an FHA loan, if you're paying mortgage insurance. And so sometimes the interest rate isn't really what you're wanting to look at reducing. You might already have a low interest rate. For example, I bought a home for my mom, and it had mortgage insurance on it. So now I am refinancing that home, and I'm refinancing it into a conventional loan where I'm able to reduce the mortgage insurance premium. And in a year or two, I'll be able to completely take it off, even though I did not put 20% down to purchase. And, I didn't have to wait 11 years to do it,
Wow.
which is the time period, right? So I was able to more than benefit myself in addition to the interest rate decrease, because I was able to take like $200 of mortgage insurance off per month.
Nikki, let's talk about that a moment. That's something I hadn't even thought about, because what's happening right now is property values are going up so exponentially that, to Nikki's point, even there's probably still going to be some savings with interest rates being at all-time lows. But the other thing you get to knock off is what's called private mortgage insurance. So Nikki, kind of talk to us about what is private mortgage insurance.
So private mortgage insurance is something that you have to pay if you do not put 20% down on a home loan. Now, sometimes you still have to pay that if you're able to put 20% down because you only qualify for a certain type of loan, for example, an FHA loan. So it just depends on what kind of loan you have. But so mortgage insurance on an FHA loan never goes away. And at one time, or in the early 2000s, it did, but they changed that law in 2013. And so that rule is no longer exists. So if you have a loan originated prior to 2013, it's probably been taken off. But if not, and you have an FHA loan, then it's still on there and you're still paying it. And it's not necessary to pay that if you qualify for a conventional loan. Veterans do not pay mortgage insurance. So they pay what's called like an upfront fee, but they don't pay monthly mortgage insurance. So a VA loan is very good when it comes to that. But so that's always a way that I look to if I'm going to benefit someone to refinance is can we take off that mortgage insurance? Because it's not necessary to pay for it if you don't need to. Even though I just bought, like Kenny said, even though I just bought my mom's house a year and a half ago, I already have almost 20%. I have an 87% loan to value. So I have, almost 20% equity in that home already in just a year and a half. I have increased the equity that much. And that's why buying a home is an investment. Because if I had put my money in the stock market, then I wouldn't have had that big of a return on that money, so to speak. If I sold that house right now, I would make a lot of money, right? Much more than I put into it. So, you can manipulate the system. And you can take advantage of that, just knowing that what kind of loan you have. If you have mortgage insurance, being knowledgeable about that and just asking the questions. If you want me to look at your mortgage statement, I can tell you if you're paying mortgage insurance or not. So that's definitely a way refinancing can benefit you there.
Wow. Great point.
Yeah.
For those that are joining or listening to us live on Facebook, we're talking with Nikki Vinluan, who is a mortgage representative, and she's with Caliber Home Mortgage. And we're talking about refinancing. Is this a good time? And all of the questions you need to ask with interest rate at all-time lows. We're talking about the possibility of refinancing to reduce your interest and finance charge so you can pay your house off quicker. Okay, so Nikki, what else you got? What other pointers do you have for us?
So one of your questions was, if I'm planning to move, should I refinance? And the answer is usually no. because the cost, which is also another question, to do a refinance typically is around $3,500 to $4,000 in loan fees and fees to the closing attorney and all of the people that have to be involved in the mortgage process. Everyone's got to get a piece of the pie, So it does cost a little bit of money when you're doing a streamlined refinance. For example, if you are a veteran and you already have a VA loan, sometimes it can cost less, and that is always good. But typically, average $3,500 to $4,000. The way that you tell if you don't, and the reason you don't want to refinance when you first purchase, or if you're about to move, is because you're going to waste all that money. That the $3,500 to $4,000 that it's going to take to do that, you're going to lose it. Because when you refinance, you want to make sure that you're saving enough money to cover that cost and benefit you past that. So the first question I always ask is, do you plan on staying in your house at least for 5 years? Because typically it usually takes about 2.5 just to recoup the cost to do the refinance, right? Yes. So if you're about to move, you do not want to refinance. You just want to focus on, selling your home and trying to find a new one. And then that leads to the next topic is, how should you, compare proposals from different mortgage providers? So what you look at is the fees that it costs, obviously, but there's also a fee that can go along with your interest rate. And that's called, it's like an origination fee or a discount fee. It's where you're like literally buying the interest rate down. But sometimes, sometimes, and this is something that I have heard of happening, I absolutely 1000% would never do this. But someone would go to a person and say, such and such mortgage company told me they could get me a 2.5% interest rate. Well, I can give you whatever interest rate you want to. You're just going to have to pay for it, right? And they're charging you too. So being educated about what the fees are and how much it is costing you, and being able to compare companies to make sure you're getting a good deal, you're wanting to look at the APR. So there's several different, so when you come to me and say they're offering me a 2.5% interest rate, that is not the APR rate, I promise you. So when they give you that mortgage proposal, if you look at that APR rate and you look at, and the other person's APR rate, that's how you compare who has the best loan. Because it's very difficult for you to look at that sheet, right? And say, well, calculate all those fees and then look at that one and calculate all those fees. You don't have to do that. The government has actually made it to where it should be very easy for you to shop. And that's using that APR, because it takes all those fees and calculates it into the interest rate to give you a total cost. So APR is that is the percentage rate that you need to ask for when you're comparing mortgages. So you cannot be taken advantage of, and a lot of times you don't know you're paying those fees, because when they do a refinance, they just raise your loan amount and cover that cost, right? So you may not even realize that you're paying that. So you want to make sure you're very, very educated, and you do get 2 proposals. So you make sure, or go to someone you really trust and make sure that that person is somebody, that's not going to take advantage of you.
Wow. So Nikki, if I'm looking at 2 proposals and one says the rate is 2.75 and the APR is 2.85, and then the other one says the rate is 2.75 and the APR is 2.95, then the one that has an APR 2.95 means what?
It just means that they're charging that origination fee or that discount fee, and that's where that money is going. So that's how you can, the government wants to make sure that you can get that you can see that. And so that's what that APR is going to do. It's basically a calculation of all those fees so that you can compare, without looking at a mortgage statement that no one is very good at looking at, except for me, because I'll do it every day. But most people don't look at those a couple of times in their life. So it's very, it's easy to get intimidated by those estimates and those statements that a mortgage originator would put out. But you just have to know that that APR is the best way to compare and to make sure you are getting a good deal. Okay.
Amen.
Gives the total fees. Mm-hmm.
Amen. That's awesome. That's awesome.
Yeah.
We want everybody to get a good deal, particularly if you join Talk Tuesday. We're going to make sure you get the expert's opinion and you get the best deals possible. So we're talking with Nikki Vinluan, and we're talking about refinancing. We're talking about closing costs. We're talking about, is it a good time to refinance? What rates should you be looking for? We're talking about all the things you need to know with rates at historically low rates right now. And everyone that has a home looking at maybe a better way to reduce their finance charge. Refinancing is at the top of mind for a lot of consumers right now. Nikki, is there a boom happening right now in the refinance and purchase market?
There is in both markets. So refinancing is, at a high demand right now. I get multiple requests a day for refinancing, and one of the questions that Kenny has is, how long does it generally take to close a refinance? And right now it's 45 days typically, because so many people are trying to refinance at one time. The mortgage industry in all aspects and all companies are having a hard time keeping up with that kind of demand that we've never seen before. But that's a good problem to have. So, but the first thing when you go to look at doing a refinance is it going to financially benefit you? And then you're going to look at, 30 to 45 days, and maybe even 60 days, depending on what is required. So in the meantime of refinancing, if you choose to do so, make sure you are continuing to pay your mortgage payment as normal. Do not say, well, I'm going through a refinance. It's about to, they're going to pay it off soon. I'm just not going to make my payment. Even if it's close, and just go ahead and make your payment on the day that it's due. And that way there's no question about it, and they will give you that money back. You'll get a refund if you overpay, because you just want to make sure you keep that credit supreme, and keep it paid. So another question that Kenny has is, how much more will my payment be if I go from a 15-year to a 30-year?
Oh, good one.
So, yeah. So if you're wanting to change from a 30-year loan and pay your house off really quickly very soon, you can do so. Right now, it's kind of strange because typically a 15-year interest rate is significantly better than a 30-year interest rate, but at this time, they're not very different.
Wow.
And I've seen that across the board with multiple lenders too. So it's not just my company, but they're not, they're like that because of the risk. So the risk is what really drives interest rates, as far as the people who invest in purchasing the loans, they buy specific loan types. And so the 15-year loan is not really very attractive right now because of COVID, right? So the 15-year rates and the 30-year rates are very similar. So the only reason you would want to do a 15-year loan is, if you are already on, so let's say you've already had your loan for 15 years and you want to come to refinance, because we're going to take it off of, take some of that mortgage insurance off. We're going to lower your interest rate. It's going to be beneficial for you to do. So then we can just put it back on a 15-year schedule, so you pay it off at the same time you're going to pay it off originally, right? So I wouldn't recommend a 15-year if you're, if you haven't at that point, because the interest rates are the same. I would just recommend making an additional payment. And usually it's about a third more than your normal payment. So that's a good way to estimate how much your payment would be if you went to a 15-year mortgage. But there are some online tools that I can give you to figure out what your payment would be to pay it off in 15 years. You can just Google amortization schedule and find multiple sites that'll give you a free amortization schedule. And what that does is that tells you how much you need to pay in addition to your normal payment to pay it off in a quicker time, right? So if you have goals to retire at 55 and you say, well, it's going to, I need to make sure my mortgage is paid off at 55 because I want it paid off. I don't want to have to worry about it. Then you can go in there and figure out how much it's going to cost, how much more you can pay in addition. So.
Good stuff. Good stuff.
Mm-hmm.
Dorothy and Al, and then anyone else that's muted. Let's pause for a moment and give Nikki a chance to take a breath in. If you've got a pressing question about refinancing or anything maybe mortgage related, let's ask Miss Nikki right now at this time. So let's hear from you.
Nikki, if you would, tell me something about Caliber Homes.
Okay, so Caliber Home Loans is the biggest mortgage company in the country that is not a bank and that is a retail company. So, for example, Quicken is a little bit bigger than Caliber Home Loans, and any bank like Wells Fargo, Chase, Bank of America, they have their own mortgage companies. And then, so Caliber is really, really a very large company. They're just not established in the Southeast because when they started growing, this was the last place that they did so. So it's not a very common name like Quicken or, Homestar even. I used to work at Homestar. Most people know someone who works at Homestar. It's not even that big here, but it is the largest mortgage company in the country. Another really nice thing about Caliber is if you originate your loan with Caliber, typically it stays with Caliber. It doesn't get sold. So Caliber is so big that they service their own thing, their own loans, right?
Yeah.
So that was very impressive to me when I went to choose a company, because it meant that they were going to be able to go through good times and bad times and be consistent for me. So they're a very strong company and very big. So there are advantages and disadvantages of that, but the biggest advantage to you is that you get to pay Caliber and you get to continue to pay Caliber. Typically, it doesn't get sold.
Yeah, thank you.
Mm-hmm. Yeah, thank you for asking. Yeah.
Sister Dorothy, do you have a question?
Oh, well, and Nikki, if you already got an interest rate of 4%, and you could get one for 3%, is that beneficial to refinance? You only getting 1% dropped?
It depends on how big your loan amount is, right? It's a circumstantial situation. So what I would do is I would do your loan application and I would say, this is the interest rate I can give you, right? This is how much money I know it's going to save you per month, on the same amortization schedule, everything, just to make sure we're staying in line with where you want to pay off. This is how much I know I can save you. And then what we do is we take that amount and we compare it to the amount it costs to do the loan. So if you're only saving $40 or $50 a month, I would not recommend it because it's going to take you a really long time to offset the cost of doing it. So sometimes it's not, even if you get a full percentage rate. It really just depends on the loan amount and your credit score and the circumstances that surround, your individual situation. Like I said too earlier about mortgage insurance, it might benefit you just to look at it and to make sure you know what kind of loan you have if you are paying mortgage insurance. And if this is a time where you can, not do that. Some loans, and this is another good thing, Kenny, some loans, if you have a conventional loan and you're paying mortgage insurance, the values have increased so much that you can request that be reduced and or dropped. Sometimes it does require an additional appraisal, but I would pay $450 to see if I can drop $200 off of my payment, right?
Yes.
So if you can do that through a conventional loan, I have instructions on how to do that. It can be very difficult. It can take a little bit of time because the company is, it's not a priority sometimes. So I have detailed instructions on how to do that, and I can get that to you, Kenny, so you can distribute that, because that's really a good flyer to have, a really good piece of information. So,
yeah,
but that's a good question, because going from 3 to 4 to 3 sounds like a good deal, but it might not be. You've got to make sure sorry, my mom has called me. You have to make sure you know if it's going to benefit you. And that's part of the mortgage person's job too, is to tell you, explain, what are the benefits. So
yeah, that's a great point. A mortgage consultant walks you through all of those questions, Sister Dorothy, and I think we're going to put Sister Nikki's information on the screen here, her mobile number. She loves to text. Just text her or call her, and she can. And Nikki, consultations to talk to people, that there's no charge for that. Is that right?
No, yeah, you should never pay a mortgage person anything up front ever. The only thing you could technically ever be charged for up front is your appraisal, and that's because you own that, right? So you would have that whether you close or not. So typically the only cost it costs you is the appraisal. If you're purchasing, you can maybe have to pay an inspection fee and an earnest money deposit and the appraisal, but typically that's all you pay up front. And so you can get to the closing table and decide, I don't want to do this refinance. It's just not for me, right? Sorry, my mom again. It's just not for me. And you can get to closing and decide not to do it. You are not obligated in any way to do anything that you don't want to do, right?
Wow. Yeah.
Unless you really, and that is good for you. Don't ever feel pressure to do anything. You're not obligated by signing anything to do anything, right? Unless you get to the closing table, which is the attorney's office, and you're signing those final documents, right? So.
Yeah, good point. We're talking with Nikki Vinluan. Hey, I'm sorry. Go ahead. I didn't mean to cut you off there.
No problem. I think I cut you off. Question for Nikki again.
Yeah.
When a credit check's done, and explain the difference between soft credit checks and hard credit checks, what they mean to your credit.
Yeah, that's a very good question. So soft pulls are something that like an insurance company would do, or Credit Karma. If you have Credit Karma, or if you apply for a limit increase on your credit card, sometimes they do a soft check. And that's where they just look at your credit and they don't actually get your score, and you've given them permission to just look at the public part of your credit. A hard pull is what I do. And anytime you apply for a mortgage, you have a hard pull. It is usually 3 to 5 points that it'll lower your score. But you have a right as a consumer to shop. Okay. This is very, very important. So as long as you have another person pull that within a 30-day time period, then it's not going to change your score. You have a right to go to multiple companies, and multiple companies pull your credit score. It only is going to ding it one time. Okay. So you don't have to worry about having another credit pull after someone's already done it. It's okay. Right. Yes. So that is a good question though.
Mm-hmm. It is. Good question, Al.
Thank you.
Mm-hmm.
Al, where did you get that question, man? That was a real deep question there, dude.
Because I know that, your credit score comes into play when you're doing this type of business.
Yes.
And
Mm-hmm.
your credit score it has an effect on interest rates and loans amounts and that kind of thing, I think. And so that's what prompted me to ask that question.
Good question. We had someone ask this question through the chat room a second ago, Nikki, and I promised them that we would get to it. They asked the question, do you have to pay closing costs? So I put up this question that says, can I refinance without coming out of pocket? But the part B to this question is, what are current interest rates? Give us an idea what rates are as well.
So current interest rates right now are between 2.75 and 3%. I don't want to say they're not 3% because sometimes they're going to be 3%. It depends on your personal circumstance, right? So it depends on your credit score, your loan amount, how many properties you own, what type of property it is. There's multiple things that go into an interest rate. So, but right now I would say, anything between 2.5% and 3% is very good. They have been very variable since the election. So they were really, really low. They went up a little bit. Now they're down. They're getting back to normal, or like I consider normal in December and November. So they're getting back to where they were, where they're a little bit lower. But right now, it doesn't. You can't go wrong right now with the interest rates. So I would just say, if you're able to refinance and it's going to benefit you, pretty much anything under 3% you need to take, right? Yeah. And as far as the closing costs goes, so it usually does cost $3,500 to $4,000 to close on a loan, but you can finance those charges in. So what you would do is you would take the payoff of your home loan that you're going to pay off, and you would increase it enough to cover the cost of the cost to do the loan. So you could pay that out of pocket, or you could just increase your loan amount, buy the money, and just finance it. It's able to be financed in this situation.
Wow. So it's possible to refinance if you have enough equity and everything. It's possible to refinance and not really have to write a check for anything. Is that right?
Right. Correct. Okay. Unless you have to have an appraisal. That's usually the only thing that people have to come out of pocket with. And like I said earlier, sometimes you don't have to have an appraisal right now. So that's a very good thing that's happening, because the companies know so much about, what's going on, that sometimes they're not worried about your actual house. They know you have enough equity in it. So.
Okay. All right. We're talking with Nikki Vinluan, and she's helping us to understand the questions that you need to ask about possibly refinancing your home. Do we have any others that may have questions tonight as we start to wrap it up? Nikki, we want to thank you again for coming on tonight. This has been very, very helpful to us.
Good. Thank you for having me.
Absolutely.
I do have one question. My name is Cheryl. It doesn't show. It just says cable, so I'm not sure.
Hey, Cheryl, how you doing?
Hey, Cheryl.
Hey, how y'all doing? The one question I had, I heard you say earlier that you all retain the servicing rights to the loans, and I think that's great. If a consumer was to have a question, are there branches in this area, or are we limited to a telephone call with respect to questions about any loan that we may have?
So if you have, my branch is really the only branch here, and there's one in Duluth, one in Cobb County, I think. But really, I don't help with the servicing of it. I can assist you in some things. And I do have resources to get questions answered internally if you have a hard time getting through, the customer service number. So what I can tell you is that they have a really good website, and I have Caliber loans, right, currently, and they can continue to service my loans as well, not because I work there, just because they kept them. And it's so the website is very good. They don't charge you a bunch of fees, and some servicing companies charge you a fee for a payoff request. All these fees. Caliber doesn't charge any of those fees. So you can't walk in and make a payment to me, but you do have access to me. And that's something that I try to establish in my business, is that I want a customer for life. So I want you to always come, I'm going to make sure you have a good experience, and you can come to me no matter what's going on, and I'll be able to help you, whether you want to move again or refinance or whatever. So being able to come to me and me helping you, that's a very big resource for me to maintain those customers. So yes, I can help you with some things, but I can't take your payments. Does that make sense?
Yes, that makes sense. Thank you.
Yeah. But thank you, Cheryl. That's good.
Yeah, good question, Ms. Cheryl.
Yeah,
absolutely. All right. Anybody else on the line that has a question for the mortgage expert? We're talking with Nikki Vinluan of Caliber Home Loans. So, Nikki, I'm going to whip out. Wait a minute. Did I hear somebody have a question?
No, I was just saying it's been good.
Oh, yeah.
Thank you.
So let's whip out my little, I'm going to whip out my chart here, and I'm going to go down the list, Nikki, and I'm going to see if we were able to get all of the questions answered. So give me 1 second, the screen share.
Yeah, you're good.
All right, so let's see here. All right, so first of all, I think we've already given everybody Nikki's contact information. So if you don't have that, check that cell number out. And then, of course, you can get her email address on this screen, which is nikki.vinluan@caliberhomeloans.com. All right. All right. So, Nikki, let's see if I can get the screen to change here. Is this a good time to refinance? We've already answered that. Should I expect to pay closing costs? And if so, you talked about the closing costs, how much you should pay. Next question is how long does it generally take to get an approval? And Nikki, I thought I heard you say about 45 days to get one closed. Is that right?
Yes. Yeah. And be very patient with whoever you choose. If, you have someone in your family, just be patient because like I said, there's so many people trying to refinance at this time that it's very, and so they're putting purchases first. So if you're trying to buy a house, your first priority because they know you're trying to move into it. So when you're a refinance, you kind of get put on the back burner depending on, what the situation is. So just be patient with the person who's helping you if you do decide to refinance because it can take a minute. And that's across the board, all loan companies I've checked. I have lots of friends, multiple companies. So,
yeah. Okay. And we talked about the difference in interest rate for it to be worth it. Ms. Darty had the question of difference between 4 and 3. So you still just need to reach out to Nikki, even if it's a 1 percentage point difference based on the rate as well as the mortgage insurance, the PMI, it may be worth it. So definitely talk to her. And the way you compare those two mortgage offers is look at what's called the APR, the annual percentage rate, which will reflect any finance charges you're paying. And then, yes, you can actually refinance without coming out of pocket, as Miss Nikki told us. And then how much do I need to lower my rate in order for it to be worth it? It's a case by case, but certainly talk to your mortgage professional about whether or not it's worth it. So Nikki, I think we covered all of the questions as well as some others you had. So I think we've done a great job of helping educate our viewers tonight.
Yes, I think if you have any more questions you think of later, you can always just email me or text me or call me, whatever your preferred type of communication is. I'll be happy to answer any questions, even if you don't use me and you're going through the process with someone else and you just want to make sure something sounds normal. That is perfectly fine too. I don't mind helping anybody at any time, learn something or making sure that they're getting the right deal for them. Okay.
Yeah. Well, maybe down the road, Nikki, we can have you back to talk to us about home buyers programs. That may be something that our people may need to know about as well.
I know. I'm hoping so because I heard that the president might introduce a down payment assistance that would be really good for everybody. So that would be nice. We're waiting to hear from that, and hopefully that gets passed through. That would make purchasing available for a lot of people that it's not available for right now. So and also if you ever have a question about credit, I'm good with fixing credit, helping people educate them on how credit works, because when I was 19 working at the bank, I didn't know how credit worked and no one taught me that. I had to learn through all these years, and so I had to some of those lessons were hard lessons for me, but as I got into the mortgage industry, I learned a little bit more about credit. So I can give you lots of tips and tricks on how to maximize your credit score, because credit, credit is used to even get house insurance, home insurance, and car insurance. So having a good credit score is really important, and I can help anybody with that. So
awesome. Mm-hmm. All right. Well, Nikki, thanks so much. We're going to let you get back to your family, and more importantly, you're going to need to go ahead and call your mom back, right? So
I know, right? She's called me a couple times.
Nikki, thank you so much for joining us tonight.
Thank you.
We really appreciate it. Tell Brother Les Vinluan I said hey. Mm-hmm. Tell Mr. Josh I said hello, and we'll have to have you back to share with us again.
I sure will. Call me anytime. Thank you.
All right. Thank you so much.
Okay.
All right.
Thank you.
Thank y'all.
All right. All right. Well, ladies and gentlemen, that's going to wrap it up. We can call it a short night tonight. We don't have to go an hour if we don't have anything to talk about. Next week, we'll probably circle back and do some COVID discussion. A lot of moving parts with COVID right now. People are starting to get the shots, but some of the information that's coming out today is not really good. And that is, right now, they are reporting disparity in the people that are getting the COVID shots. African Americans are half as likely to get the shot as other populations. And so the data is starting to bear that out. Something we need to talk about maybe next week on Talk Tuesday. So join us next week as we talk about COVID-19, particularly the vaccine.
All right.
All right. Yes, ma'am.
Let me ask you a question, and
yes,
Nikki
ma'am.
is still on.
Yeah, I'm still here.
Brother Les, was he at Gospel Light?
He was. Yes,
Yes.
ma'am.
Yes.
Okay, my two boys was through him also.
Yeah, that's awesome. He's touched a lot of kids' lives, a lot of people's lives. A lot of people have came to the Lord
Yes.
through him and his ministry. So I know when he gets to heaven, he's going to have a lot of offerings for the Lord, and I'm
That's
excited
right.
to see that. Mhm.
He's a great guy. I love him to death. Great man.
Mhm.
Great man. All right. Well, everybody have a great night, and we'll see you next week on Talk Tuesday.
All right. Good night.
Thank
Good night.
you.
Right.